You know, yesterday when we were on the show, I said to you guys that 24 hours from the show, Bitcoin's going to be above 25,000. And that's because the market is going to realize that they're not pricing in all the keyword which we spoke about yesterday, which is liquidity above 25,000. And that's because the market is going to realize, there we go. So, and now what we're seeing is that Bitcoin is at 26,550. And if 𝗙𝗍𝗃 is right in his new blog, then this pump could make the last COVID stimulus pump look like it was nothing. That's what we're going to talk about today. We're going to talk about this pump. We're also going to talk about altcoins because it's Bitcoin that's running. It's not altcoins. Are the altcoins ever going to follow, or should we just take all our money now, put it into Bitcoin and enjoy the ride? That's what we're going to talk about today. So listen, if you're not out of bed, get the hell out of bed.
Get the fuck out of bed, bitch, go. Get up, and get the guy go. Time to wake up, bitch, get up. Get up, get up.
Wakey, wakey, rise and shine. It's a beautiful day. As you can see, Bitcoin is above 26,525. It's also smashed the opponent. You can see that little red opponent, as Ivan on Tech says, which is the 200-week moving average. Now, if we close above this 200-week moving average on Sunday, when we get the weekly close, it will be the first time that Bitcoin is above the 200-week moving average since the 15th of August, 2022, or there or thereabout. But it'll also be the first time in a long time that Bitcoin's broken up above, from being below, straight through this 200-week moving average. So this is a key point. And in fact, we've got a lot of breathing room here because the actual point is about 22,250. So as long as we stay above 22,250, I think we're safe. At the same time, if I look at dominance isn't stopping. In fact, let me take you to the daily chart because it gives you a better picture of dominance. But just look at that Bitcoin dominance going up to 46.5%. Yesterday, when we were here, it was 45.5%. Is this going to be a Bitcoin pump, or are the alts going to follow? That is what we're going to be talking about today. So let's just make sure everyone is here and everyone's in class. If you're here, say present. Nathan Fredericks, if you're here, say present. Lulu, if you're here, wake up and say present. Jimmy? Josh?
Present.
Present. All right, amazing. Vincent, Mark, if you're here, say present. Alex Kruger, if you're here, say present.
Present.
All right. Grant Cardone, if you're here, say present. All right, he's present. Adam, if you're here, say present.
We're here.
Everyone's present. We've got a full class, guys. We've got a full class. I guess we can start. So before we get into the alpha, if you are new to the channel, obviously subscribe to this channel. We are one of the fastest growing channels in crypto. I saw that we've picked up like 2,000 subscribers since like 48 hours ago, which we now, are we at 614,000 yet, Josh? 613 what? I need details. I need data. All right, so we're going to check how many subscribers, but subscribe. And if you are already a subscriber, then like this content. Remember that today is Friday. It's a Banter Friday, and our Banter Fridays are brought to you guys by NordVPN. They are the crypto VPN, and they are celebrating their birthday now, and they've got 2 new products. Now, I don't want to mess this up, but they've got 2 new products to protect crypto people. The first one is called Threat Protection. It costs $2.49 a month. Now, what this product does is it makes sure that you're not landing on malicious websites. And if you do land on malicious websites, it basically blocks you off. So if you're in crypto and you don't have a VPN, and you're not masking your IP address, that's the first thing you need to do. But if you are masking your IP address, you want to make sure you don't land on malicious sites. And that's what this product over here does. It stops you from landing on malicious sites. Also, if you get folders that have, or files that have viruses and stuff on it, or malware, it detects it and it completely removes it from your computer. It also blocks any web tracking or intrusive ads. So this is a product that you want to have. The other product is one which I really love. Okay, now this is called Incogni. Now what this does is it takes you off these data broker website pages, so they can't be contacting you. Now, for me, that's a big thing. I hate my privacy being breached. And what it does is it actually does that for you. So remember, if you are in crypto, you want to be surfing anonymously, you cannot afford to be showing people your IP address. That's why NordVPN protects the crypto community. They are our partners, they are sponsors, they do help us bring these amazing banters to you guys every single Friday. So support us and support them and protect your crypto. All right, let's talk about what's happening on the market before we bring in the guests. So very simply, yesterday when we were here, I said to you guys, I think that in 24 hours, in fact, let's just go to yesterday's show, listen to what I said yesterday. Full liquidity chart. Now, I'm going to show you today how there is a lot of liquidity coming into this market, and that this liquidity is maybe not being respected by some, and that's why Bitcoin is at 24,700. I also believe that within 24 hours, Bitcoin's going to break $25,000. And I'll show you why, because I think the market will realize how much liquidity. Remember, today's keyword in class is liquidity. Today is all about the keyword liquidity. So remember, we spoke about liquidity yesterday, and I showed you guys this chart over here, and I said to you guys, the market's not seeing the amount of liquidity that's coming into the market. And when they do, then I think that Bitcoin will start pumping. So speaking about liquidity, we have had in the last 24 hours, we've had some major, huge liquidity news, or some major, huge liquidity events. In fact, the whole week we've had liquidity events. But in the last 24, who is emailing me during the show? That is crazy. In the last 24 hours, we got a whole lot more liquidity. So let's look at what happened in the last 24 hours and why this liquidity chart is going up. Well, if you look at the Fed's balance sheet, and in fact, let's look at the more global view. So that's the global view of the Fed's balance sheet. And you can see that this balance sheet increases when the Fed put money into the economy. So you can see that before COVID, the Fed's balance sheet was sitting around here, around $4 trillion. Then we had COVID, and then the Fed pumped into the economy about $5 trillion. And then they started to try and get the money out of the economy. And you can see they did a great job trying to get it down, slowly, soft landing. Well, whatever they did in the last week or so, they've lost a lot of headway. And the reason why they've lost it is because an insane amount was borrowed, getting more liquidity into the market. So that's the first bit of liquidity news that we have. And as I said to you, liquidity, global liquidity, is what makes Bitcoin go up. We also had the European liquidity that came into the market this week, which was the bailout of Credit Suisse. And that stabilized the banking system because they were allowed to borrow up to 50 billion francs from the Swiss National Bank. So that's more liquidity into the market. But then China got into the race. They were getting FOMO. They felt left out of this whole liquidity thing. And so what happened is China cut the reserve requirements that the banks need to have. And what that does is it puts more liquidity into the market. So that is global liquidity. And as global liquidity goes up, number go up. And I don't know if you guys read 𝗙𝗿𝗄𝗍's Medium article, but I'm not going to run it for you guys. But what he says the Fed printed $4.81 trillion in response to COVID. Right off the bat, the Fed implicitly printed $4.4 trillion with the implementation of the new banking program called BTFP. During the COVID money printing episode, Bitcoin rallied from 3,000 to 69,000. What is it going to do this time? So he's thinking that this pump is going to be way bigger than the pump we saw last time. Now, on top of the global liquidity that we've had this week, we also have some crypto-specific liquidity. So let's talk about the crypto-specific liquidity. First crypto-specific liquidity is we have $1 billion in the Binance wallet, which they said they're going to use to buy BNB, Bitcoin, and Ethereum. And you can see that they started drawing down on that wallet. Yesterday, there was $1 million plus. Now we've got $883 million in the Binance wallet, which means that they're starting to spend. Also yesterday, we got news of the biggest airdrop in crypto. So that was the Arbitrum airdrop. We spoke about it yesterday. And if you look at the Arbitrum airdrop, next week, on the 23rd of March, 11.62% of the Arbitrum tokens are going to be airdropped, given for free, more liquidity, more stimulus, crypto-specific stimulus, okay, are going to be dropped on the market. Now, what does this translate to in terms of money? Well, if I've looked at for a whole lot of different valuation models, if Arbitrum trade at more or less the same valuation as Optimism, the token will trade at about $1, which means that there'll be $1 billion of tokens airdropped onto the market. Now, it should trade at even more than optimism, because if you look at Arbitrum on all the metrics, total daily active users, total transactions, total value locked, total DEX volume, whatever the criteria, Arbitrum seems to be bigger than optimism. So maybe the token will come on at about $1.20 or $1.30. By the way, if you want to know whether you qualified to get this airdrop, what you need to do is you need to go to this website over here. It's called arbitrum.foundation. Be careful and make sure that you actually are going to this, or use NordVPN and they will make sure you're not going to malicious sites. And connect your wallet and it will tell you whether you managed to get any of this airdrop. Long story short, we spoke about liquidity. Yesterday, I told you that Bitcoin is all about liquidity. And now we're seeing the liquidity come into the market. And the big question is whether we are indeed getting into a big bull run. And if we are getting into a big bull run, is it going to just be a Bitcoin run, or is it going to be Bitcoin plus alts? That's what we're going to talk about today with our big guest here on Friday Banter. As you see, we've got Alex Kruger with us. We've got Adam Kobeissi from the 𝗵𝗵𝗃𝗃 letter, and we've got Grant Cardone. Guys, welcome, guys. Welcome.
Thanks for having us.
Yeah, so good to see you guys. Wow, what a week. Last week.
Morning, guys.
Morning. All right, we're all here. What a week. Last week, this time, Silicon Valley Bank was collapsing. 4 hours from now, we discovered that Circle had $3.3 billion of crypto in Silicon Valley. You're just stirring me. You're very loud. Is that you, Alex?
Oops, sorry. Yeah.
I think it's picking up your mic from your laptop or something, so it's like you're in the thing. Anyway, we're a week later. We've had 2 bank bailouts. We've had Silicon Valley Bank, and then probably any other bank being bailed out by the Fed. We had a Swiss bank bailout, and we've had China saying that the reserve requirements are cut. Are we getting into a new era of stimulus, or am I dreaming?
I think it's about right, but I do want to say something is comparing this to QE and especially QE Infinity, what happened in COVID, I think is massively misplaced, even though this is very bullish. I am very bullish. I think Bitcoin has a lot of space to run upside. The thing about conflating these with past QE rounds is that, first of all, this is mostly about using a discount window. So let's put it this way. In QE, it's basically QE is an asset swap where the Fed swaps treasuries of different maturities for reserves. So the Fed is actually giving banks reserves, which are an asset on the bank's balance sheets, and banks they get paid by the Fed yield. The BTFP facility is somewhat different. It's basically a facility where banks are using treasuries as collateral in exchange of funds on which the banks are paying what is called the OIS interest rate, overnight index swap, which right now sits around 5% plus 10 basis points. So is the opposite of free money. It's actually very expensive liquidity, which is needed. And estimates are they're going to run up to $2 trillion. So on that hand, is massive. So the first difference is the mechanics behind it. And the second difference I wanted to point out is that this money, unlike QE in 2020, is not money that was used to finance spending, but rather it's more like QE in 2008 and the rounds that followed, QE 1, 2, 3, and 4, where this is money that is actually sitting mostly in the bank's balance sheets, and it doesn't flow into the economy as much.
Okay, so are you saying that we're not going to get it into the economy? So it's not going to be a big stimulus? Because when I read Arthur Hayes' very compelling argument, he says that this is going to be much more in the economy than the previous ones.
That's exactly what It's not. I'm very, very strongly believe that it's not even remotely as strong as prior rounds. It's very important because what happens is we've just been through a massive period of never-ending selling. So sellers are exhausted. The chart on the upside has very little resistance. If you look at a volume profile that I just pulled up, like right now here, this
You want to share?
massive.
You can see it.
It's the one that's right here. I don't know how to do it behind me. But
good.
it's basically, you have this massive amount of volume, basically Bitcoin between 15.5 to 25. And then it's like nobody's land. It's what we call a vacuum. So Bitcoin is getting into hot air territory here. So from a chart perspective, it's extremely bullish. Also, as you were pointing earlier, right above the 200 weekly moving average and a few other things, momentum turning. This is the kind of thing that macro guys who look at technical analysis, which they do exist, they're not a fairy tale. They're looking at this, but yeah, I don't see it as the pump that takes us to new highs. Just something that takes us into the 30s.
So Alex, does money? In your mind, does money get cheaper or more expensive?
Cheaper. Yeah, absolutely cheaper. It's happening.
I think it's also important to say it's not. I mean, it's definitely not QE. This narrative was going around on Twitter all yesterday afternoon. Pretty much every big account was tweeting it's QE. QE is when the Fed is buying government bonds and other securities. This is all loan based. Like, I'm looking at the numbers. Discount window borrowing was 140 billion. There's 142 billion in Fed loans that were extended and established by the FDIC, and the 11.9 billion came from the BTFP program, and then so that's how they got to that 298 billion. There's like 7 billion in treasuries, 2 billion in mortgage-backed securities, but it's not QE. So I mean, that's a key distinction.
But Adam, what's the difference, man? What's the difference that you changed the name?
I mean, it's fundamentally different, though. I mean, it's not. They're not buying bonds off the open market. They're not injecting. They are in a way trying to inject near-term liquidity, but this is expensive, right? The banks are borrowing from the Fed. That's completely different than what's QE. It's a different.
But I mean, ultimately, doesn't it come down to the size of the Fed balance sheet? Because for me, like, the Fed balance sheet on the one side is exactly inversely correlated to the amount of money in the economy, kind of thing. So as the Fed balance sheet gets bigger, we get more money in the economy, and as the Fed's balance sheet contracts, we get more money getting out of the economy. I don't really care how it got there. I just look at the chart, and I can see that all the money is there, right?
Yeah, I mean, you do. The root of the program is to provide liquidity to banks, but it's a different type of liquidity than what you get in QE. I think this is more just near-term funding to avoid or to minimize the run of the banks, which I don't think is contained by the way. I think Bill Ackman has been spot on that the FDIC and the Fed have kind of backed themselves into a corner, saying that we bailed out SVB or backstopped. I'm going to not say bailout because it wasn't an equity bailout type thing. It was a backstop. But now you have regional banks everywhere. You have thousands of regional banks that have basically outsized risk, right? I mean, you're taking on extra risk for going. Why would you take that risk? I mean, if you're above the FDIC, let's just say you have $100 million in an account. Why would you take the risk in keeping it there when you can just go to a JP Morgan, a Bank of America, or something else that is?
Because you have a relationship with that bank and you're trying to do deals, and that bank knows you, and JP Morgan is not going to look into your deals. I think there's a 5-month onboarding process right now for one of the big banks. Like, what am I going to do?
Is that relationship going to save you if there's a run, or if you end up in the same situation?
No, but they're going to save me to do business.
Right. I mean, I think
nobody's going to get saved on savings. They're going to get saved on expansion and doing business and growing their business.
Well, hold on. Let's ask the question here. Let's just ask the question here. I just want to get a piece of a tweet, but let's ask the question about what Janet Yellen actually said. Are they bailing out all banks?
She said what she was told to say. That's what she said.
Oh, let's listen. Let's just quickly listen to what she said. I'm taking this from your tweet at the Kobeissi.
So what is to keep large depositors from moving their funds out of community banks into the big banks? We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No,
fail.
it's happening
And
because you're
it's-
fully insured no matter what the amount is. If you're in a big bank, you're not fully insured if you're in a community bank.
Well, you're not fully insured. And
So,
Right.
so,
So what
these
is
two
your
banks.
plan?
so are they killing the small regional bank here? Is that
Yeah,
what's going on?
We tweeted that because I mean, that was the question that everyone's been trying to ask for like the last week. And she had the chance to answer. I mean, if you're preparing Yellen for a response to Congress, that's the number one question you're going to prepare her for. And she didn't even have a response. She basically said, I mean, there is a run happening on the smaller banks, and then they're trying to find, what's the solution. She couldn't provide a solution. I think the only solution now, and it's a very costly one, is that the Fed and the FDIC need to backstop all banks temporarily, at least until this run stops. Because it's not necessarily like all these regional banks they have horrible management or they're falling because rates are rising quickly. This is largely a product of human behavior. It's almost a domino effect, right? So if you just let things calm down a little bit, you'll start to see, panic will subside, and then you'll start to see this bank run will kind of stop. And you might see some acquisitions by the larger players from JP Morgan, Bank of America. But I think right now they really just need to backstop everything and eliminate that panic.
Grant, what do you think?
I do. Yeah, go ahead. Sorry.
I mean, I think the whole thing's a bullshit Ponzi scheme.
Tell me why.
The Fed window. Okay, so I'm a real estate guy. Okay, I go borrow for a real estate project. Local bank gives me a real estate loan. They count that as an asset. I'm the only one with the asset. They don't have the fucking asset. They take it to the Fed window. Excuse my language. They take it to the Fed window and they claim that as an asset that they have not written down yet. That's the problem. We have massive numbers, not just in treasuries, but also across the commercial real estate market. Trillions of dollars of unrealized losses that cannot be corrected with an interest rate one way or the other. I believe at the end of this year, we will be begging for inflation in this country. This guy, Jeremy Powell, is the new Anthony Fauci, and inflation is the new COVID. And they're going to print money again at record levels.
Yeah, I mean, we're seeing that. We saw, in fact, the narrative has been that the Fed is going to continue to raise rates until such time as they break something. Do you think that when the banks went down last week, it was a sign that something was about to break? Alex, what do you think?
I think it's 100% happening. That's exactly. Yeah, I think we all agree here. And this is the big thing. And something else I wanted to add is basically what happens is with the yield curve, the way it's inverted, banks are not profitable because they paying on deposits on the short end of the curve, like say now. And their assets, they are longer term. So you have this mismatch where basically when you invert the yield curve, they're not making money. So what happens if the Fed hikes again and keeps on hiking? They're putting more pressure on the front end of the yield, meaning basically pushing yields higher on the front end. And basically what that produces is a perception that the economy is going to be doing worse off in the future, recession talks, which basically that's exactly the opposite and push yields down on the far end of the curve. So you get it even more inverted, higher on the front end, lower on the far end. And that makes banks less profitable. The bigger banks, they can take it on. The smaller ones, they can't. So if the Fed keeps on hiking, they're basically going to bankrupt all the little guys. And the little guys are, depending what metric we pick, they are responsible for lending, for generating 30 to 60% of the credit in the economy. And one last thing, and then I pass it on. The Fed cares very deeply, yes, about inflation and their dual mandate, but they also care about the flow of credit. They talk about it during normal times. They parrot about this nonstop flow of credit. Because what happens when credit freezes, When credit freezes, there's no lending. If there's no lending, there's no inflation. The economy stops.
All prices will come down. By the way, I don't believe that printing money is the cause of inflation. It is a bunch of people doing reckless stuff, buying Gucci shoes that they shouldn't have afforded, didn't deserve, aren't privileged enough to have for whatever reason, like whether it was fair or unfair. People went and spent money. When I got PPP money, I went and invested it in real assets, and the rest of the world went crazy. Like people are acting today with these banks. They're not going to bankrupt every bank in America. It can't happen. Game's over. We can't play a game anymore.
Okay, so if what you're saying is right, why is the market saying that on Tuesday or Wednesday when the Fed meet on the 22nd, there's a 76% probability of a 25 basis point rate hike? If things are broken, leave rates as they are.
And
Cut
they
rates.
will. I believe they will. I'll bet everybody a hamburger they don't move rates.
You've got to be careful. There's 6,000 people watching this right now. So if you want to bet 6,000 burgers, Grant's buying 6,000 burgers.
Yeah, it's going to be a nothing burger.
Okay, wait. So hold on. So I've got the three of you here. Alex, 25, 50, 25 basis points, 0. What are you seeing on Wednesday?
If we see 50, which I think the odds are almost 0.
0.
We crashed like we crashed in Corona, in March. Is bad. If we see 25 or 50 or 0 at this point, a week ago I was in the 25 camp. Now I'm 50-50. So I think the market is mispricing right now the odds of like no cuts, basically. But I am 50-50, and the reason I'm 50-50 is, first of all, we had the ECB literally ignore this crisis completely yesterday and just hike 50 basis points like as if nothing. And we need to think that is the probability that these guys are actually coordinating and talking among themselves, meaning central bankers at the very top, is very high. So that's one point. And the second reason is that I lost my thread. It's
So you
for a bit. Yeah, sorry.
hold on. So while you're gathering your thoughts, so what do you say? 25 or 0?
He's saying there's a 50-50 on the 25.
Oh yeah.
All right, Grant, what do you think?
I'd say there's nothing. I bet a hamburger on it.
All right, Adam, what do you think?
I think they're going to raise 25 unless there's a collapse of one more bank before then, like an FRC or a WAL. I don't think this is a complete systemic collapse yet. I think it's the large banks are actually they're almost flat during this whole crisis. They're probably down a couple percent each, a few percent, and they're actually benefiting from this. It's just more consolidation. We had 100 years ago, we had 31,000 banks in America. Now we have 4,000. After this, we'll probably have 3,000. It's just consolidation. The large banks are clearly looking at this as an opportunity. You think that all these banks yesterday just said, oh yeah, we're going to go give 30 billion in deposits to FRC because we're good friends with them? Absolutely not. They are benefiting from this more than anyone. And the government is actually relying on the large banks now.
And Adam, don't you think the 30 billion that went into FRC, that money ends up rotating back to the big banks anyway? Because as soon as the money hits, the deposits are coming back out and going back to the big banks anyway. So they're like, we'll look like good guys. They're probably getting some kind of backstop by the government. And they end up with the deposit anyway.
100%. And actually, this actually just amplifies the risk that FRC has to the system, because now you give 30 billion of exposure to the big banks to FRC. That money goes back to the big banks. And then now you have the big banks having exposure to FRC and then FRC back to where it started. So I don't think my point is, I don't think it is spread yet. I think it is in the process of spreading. And that's why I could see the Fed saying, we will raise 25 bips. ECB raised 50 bips. We will raise 25 bips because inflation is still at 6%. I mean, inflation is killing Americans right now. This is insane.
I don't agree it's killing Americans. I don't know where this headline came from and how we started all singing this mantra.
I mean, we've had 5% inflation for 22 consecutive months. The consumer confidence has fallen significantly. Interest rates have more than tripled. We have record household debt, 16.5 trillion. You have record mortgage debt, record auto loans, record auto rates, credit card debt near a record trillion. consumers are taking on debt because of inflation. They can't even afford basic necessities, so they're levering up into rising rate environment. In my opinion, that is highly correlated to inflation. I don't think consumers are just looking to take on debt like it's nothing.
But they do. Like, guys, people are buying stuff they should not be buying and have been for years. Okay.
So Grant, what do you think? Do you think this inflation thing is not really a problem? It sounds like you're saying that.
I think inflation's good. I think we should have inflation. I don't know why we turned it into that's why I said inflation's the new COVID. I'm not sure that COVID wasn't good for everybody. Maybe it makes us environmentally stronger or our system better. Like, not all this stuff is bad. Like, prices have to go up on products and services. At the same time, we're doing this today. This costs you nothing to put on. 3,000 or 4,000 people, we all get connected. Literally costs zero. I would rather have higher prices of my house and be able to connect with 3,000 people on a Friday morning at no cost to any of us. That is deflationary. There are so many things in our system that cost nothing that we don't appreciate, but the price of eggs went up. Well, look, let them go up. Let them go up to where you're like, yeah, I need an alternative to eggs. I'm going to have to eat cereal this morning. That won't kill anybody. And I can't eat eggs.
But Grant, inflation, you're right. It is healthy, but what is the level of inflation? What is the long-term? Are you saying that 5%, 6% inflation?
Inflation is healthy, guys. Inflation is healthy if you're at the top end of the curve and you have assets and your assets are appreciating. Inflation is healthy, but you take the majority of the curve. The majority of the curve can't afford to eat, let alone eggs or cereal.
That's not true. Nobody's not eating. That's true. That's an over dramatization. People are eating. Okay, people are fucking. They got lines at Chipotle, getting little egg bites at Starbucks. People are lazy. People aren't working hard enough.
Alex, I want to hear your view here.
I actually just want to say here on this that inflation is actually what inflation does is it redistributes money from some part of society to another. So the ones that win are the government and the middle class because they get their debts basically liquefied. The poor people, they suffer, and rich people actually they suffer as well because they have much of their money in treasury, in basic, not in treasuries necessarily, but in fixed yield assets that they lose value or their yield doesn't adjust with inflation. So the rich lose, the poor lose, the middle class wins, and the government wins. That's basically the equation here. But I would just say, guys, the interest rate has caused the damage in the system, not the inflation. The price of a mortgage today is double in 50 cities, double the rent. I keep hearing everybody say, oh, the rents are going up. The rents have not exploded in this country. If you go to Singapore or you go to England, the rents in America are still affordable compared to some other countries. And they are 1/2 of mortgage rates. Jeremy Powell is the one that is killing the housing a possibility in this country for people to own a home because he raised rates at historical levels in order to control something called inflation. And it's never been controlled by the Fed, ever. They've never been successful controlling inflation with interest rates.
I think inflation, you're right in a sense, but if they don't raise rates and just let inflation run how they want it to, let it run its course, I think they will have much more damage in having. And also keep in mind, mortgage, rates have doubled, tripled, but we were also at 0% rates. I mean, I don't think a long-term solution is let inflation run with 0% rates. I think you might need a 3% run rate on inflation now. I don't know. It might not be 2, but I don't think you can just say, on one end, inflation is good, don't raise rates. I don't think that's healthy in the long term.
So wait, I want to challenge you both because I think the Fed is getting inflation under control. I'm only looking at the data, and the data shows me that inflation's come down from 11% or 9%. It's back at 6%. If I look at PPI, which is for me the leading indicator of inflation, because we know that the PPI is going to flow into the CPI in a couple of months. This is the biggest drop in PPI that we've had in a long time. I mean, it went from 5.7 to 4.6%. I think the Fed's done a great job of reducing inflation, but I just think that they've broken something. And what they've broken is they've broken the small banks. But I also think that what they've done is that they've put a Band-Aid over it. And they've said, look, by insuring the depositors, forget about the equity holders, by insuring the depositors, They have mitigated the risk of any other bank runs because you know that there's not going to be a bank run on your bank, because if there are, the depositors will be made whole. So there's no reason for you to actually run for the door. And so I think that the Fed has actually bought itself more time. And in this time, they can continue to raise rates, which is why I went from being, I was on the camp that there's not going to be an interest rate increase. But when I saw what the Fed did, I changed my mind. I said, you know what, they're going to do another 25 basis point rate hike. That takes me to my next point. I think the American market is delusional if they think that the Fed is going to increase rates only to decrease rates the next month, because that's not how it works. You don't increase rates in March only to reduce them again in April or May. That just sounds dumb. And if you look at what the market's pricing, it's pricing 4.75 to 500 in March. Fast forward to May, stays at 4.75 to 500, no increase. Then, okay, in June, earlier on today, this was actually pricing in a decrease. And then in July, I think they starts pricing in a decrease. There we go. So, oh no, sorry. So now it's changed. But I think the American people need to understand that here we go. So from September, they're pricing in rate decreases. And I don't think that's how it's going to work. You don't increase interest rates 1 month only to reduce interest rates the next month. What do you think, Alex?
Ran, I do want to say on that, and it ties up actually to what I wanted to say, what I was saying when I lost my train of thought before. This is the key. The thing is, on one hand, the Fed is kind of like putting itself on one corner by repeating 25 basis points, by repeating hikes so often. On the other hand, if they raise this, basically this facility, it's like, as you were saying, it's a patch. That it's a very short-term patch because it does not fix the issue with banks. Regional banks are still unprofitable, and even if the deposits are safe, people doesn't care. They take their money anyway away because that's just how we work. We are herds. We move in herds. So the thing is that it perfectly well could happen, and actually I think it would likely be the case that if we get a hike now, we get cuts afterwards because markets could easily, like regional banks would collapse. And onto that, I wanted to add, this is what I wanted to say before, is that there's been at least two Fed officials, I think it's been specifically two Fed officials, Waller and Williams, that in October and November last year, right after the BOE UK pension fund crisis that sent the pound under one briefly, they specifically said that the Fed has the tools to fight financial stability concerns with facilities and various tools, and basically monetary policy should be used not for financial stability issues, but exclusively for fighting inflation.
Grant, what do you think? Do we get a rate decline? I mean, does the Fed concede that it's gone too fast, too quickly, and then we start getting rate cuts in May, June, July?
Well, they have gone too fast, too quickly, and they're hurting the middle class. They're hurting people that want to start a business, grow a business, that are going to need debt, that won't be able to get it. They're going to hurt people that are starting technology businesses that won't get a loan today, won't be able to get a loan. They're hurting the small banks. So, I mean, I can see your chat. Your chat just loves me here, saying I'm delusional. Look, I came from the goddamn mud, man. I came up with nothing. I've never used debt to start a business. I got 16 companies. We do $150 million a year here with no debt, and I buy a bunch of real estate. I bury all my money into real assets. There's $21 trillion worth of commercial debt in the United States, and I'll bet you 30 or 40% of it is upside down by half. That doesn't count all the apartments that have been constructed across America and under construction. These deals were done at 2.5% and 3% interest rates, and they're waking up this morning to 7 and 7.5. You guys will have a $4 or $6 trillion walk away across America. It'll be the biggest housing collapse in the history of the world, not just the U.S. They will have to lower rates in order to keep the machines going, unless you guys don't want to play Monopoly anymore.
All right, Adam, what do you think? Lower rates in 2 months?
I'm still in the camp that I think they're going to raise rates 25 bips. If nothing else breaks until then, we might see 25 bips rate hikes. And then I think the Fed they're only going to start rushing to lower rates, like, that drastically if more things start to break. Otherwise, I could see them just keeping rates elevated, not hiking, not cutting, maybe cutting 25 bips every couple meetings until inflation falls back towards their 2% target, which they were so adamant about just a week ago. So I mean, it's still too soon to just say, you know, the Fed is done. That's it. Rates are going back down.
How much has to break though, Adam? How much has to break for you to finally be satisfied?
I don't think I think they think nothing is really that broken right now. I mean, you saw that clip that Yellen played. She said we're not encouraging a bank run, but if you go to the streets, there's literally a bank run. So what they're doing versus what's happening versus what they perceive are different things, in my opinion. I really think that they think they've contained this to SVB, and that they're going to work with the big banks, and it's not going to spread. And then we need to see another regional banks collapse like SVB for them to really get that wake up call, in my personal.
How can the bank collapse? How can the bank collapse if you've basically told depositors you're going to be made whole? How does the bank collapse when there's no bank?
That's why I don't think that they think it's a systemic problem. They have the backstop of the U.S. Treasury, and any bank that's going to, what are they going to say now? Oh, we don't want to, you know, if you're only the 20th largest bank, we can't back you now. They're not going to say that. They've established a precedent. It's like every bank is expecting the same thing.
So therefore, the banks can't crash. And if the banks can't crash, there's not going to be any bank runs. And if there's no bank runs, then everything's fine. Then you can just keep increasing rates, because no one's going to. The banks only crash when people go to the bank and say, can I have my money? And the bank has to sell long-dated T-bills to meet those obligations.
Exactly.
But no one's going to the bank, because there's no need to go to the bank, because it's going to be backstopped by the.
It's actually pretty ironic. The safest banks in the world right now are the riskiest banks, because they have the backstop of the U.S. Treasury. These regional banks, SVB is the safest bank. You're getting your money. Unless the U.S. government collapses and we default on everything, you're getting your money. That's safer than JP Morgan.
I want to ask you guys a question. Why is Bitcoin going up? Is the Bitcoin going up because people have realized that it's the ultimate store of value that the government can't take? Is Bitcoin going up because people are scared of their money in the banks? Is Bitcoin going up because of liquidity? Why is Bitcoin going up? Why is Bitcoin?
I think there's a growing movement, and I tweeted this at CZ this morning. He was talking about how no one's hating on Bitcoin anymore. I think, look, there's a lot of speculation, but I think there's also a growing movement that's saying we have two big problems. We have 6% inflation, and we have a collapse in the banking system. Bitcoin, in a way, resolves both of those problems. So I think a lot of money is rotating into there, and people that have, you know, millions of dollars are saying, well, maybe I'll buy a portion of my deposits into Bitcoin. Maybe this will be the future. But I still think Bitcoin is acting more as a speculative asset than a fundamental way of spending money. I mean, I don't think anyone's really buying Bitcoin at a gas station or buying stuff with Bitcoin at a gas station right now.
But that's not what Bitcoin's for. It's the same as gold.
They're storing because I think people have lost confidence in cash, and that's being exacerbated right now. They're like, shit, I'll take a risk now. I'll risk it for the biscuit. You know, like I know I don't. My cash is garbage, and so I'm going to go I'll go take a shot now.
That's 100%. That's just correct. It's the least bad option, right?
You know,
why is this Bitcoin? What is this Bitcoin green candle? Is this the most effective marketing campaign in history that the Fed did for us last week?
I think so. It's also, I mean, the main reason for me is the market smelling the Fed pivot, and it's actually getting priced in on various euro-dollar Fed fund futures curves. That's what the market is pricing in. That's the main driver with this liquidity, this BTFP facility. Without the pivot, eventually we crash hard. And so number one is the pivot. Then the liquidity. Third, the CC 1 billion bit that is largely still out there. And fourthly, this new narrative, which I think is partially real. It's not just a narrative. As you said, the marketing campaign, it's very real. I think there are actual real hedging flows into Bitcoin of a considerable size for the first time ever.
Grant, are you a Bitcoin? I know you're a real estate guy.
Yeah, I own some Bitcoin.
Why do you think that people are running to Bitcoin? What's the main reason why in the last week?
You know, it's what people do when they get emotional. They're like, okay, I'm worried, I'm scared. Like in 9/11, this happened right after 9/11. People moved money to homes. In COVID, they started buying cars. And you buying a car? Why are you buying a car during COVID when you can't even go anyplace? You know, like, what are you buying Gucci's for when you can't even go out? It was crazy, right? Because people are emotional. So now they're going to move money. I'm not saying all this is emotional money, but maybe it was that moment, that last thing that said, you know what, dude, this dollar is going to get destroyed. It is worth nothing. It has never been worth anything. The U.S. Treasury is not worth anything. The FDIC is not worth anything. These are paper instruments that are made up. They're fabricated in somebody's, if these were drugs, it would be a lab. It's a lab. It's a laboratory experiment. They make it up. They create it. They put "In God We Trust," backed by the faith of the U.S. government. It's all bullshit. So,
Alex,
take a shot with it. I'd like to buy more of it right now.
you should, because it looks like it's just going to carry on going up. At least that's what the charts are telling us. I mean,
Maybe this is how I get rich.
well, a lot of people have. Alex, I want to ask you a question, and I want to also bring the same question to Adam. I'm looking at the Bitcoin dominance chart. Okay, now we can see this is a Bitcoin run, and it's not an altcoin run yet. Bitcoin's flying, and altcoins are moving very slowly relative to Bitcoin, if at all. Do you think that this is how this cycle plays out, or do you think that this is the same as every other cycle, where Bitcoin starts, and then after Bitcoin starts, then the altcoins come in, and it all gets it all happens? I want to actually show you. So this is the beginning of the last run. You can see it's December 2020. First, the dominance went up, which is exactly what happened to Bitcoin, and then straight after that, the dominance crashed and the total 2 exploded. Is this a repeat of that pattern, do you think, Alex?
Let me say that I'm bullish Bitcoin. I prefer Bitcoin over ETH for the first time since early January 2021, December 2020.
Tell me
for the first time since basically the blue wave narrative that we have at the end of 2020. Since then, this is the first time I'm excited about Bitcoin because of this move, because of what happened over the weekend, because of price action. And if I dig a little further, I think if you look at the on-chain activity on the Bitcoin network, it's exploded early this year because of ordinals. Yes. That being said, that's not the main driver. That's just, a little spice on the top. That being said, I mean, I try not to name names, but the only altcoin right now that I like to put on a book, it's kind of like a little bit late, but it's a layer 2 Bitcoin, layer 2 called Blockstacks right now.
Yeah. Okay. Wow. Bitcoin Maxi. Sounds like we have a Bitcoin Maxi in the house. You weren't like this before, Alex.
Not at all. No. I flip back and forth, but this is a significant flip for me. Large enough for me to talk about it. But it's a Bitcoin move. I think it still has legs. I'd say 2-3 months, and we go back to normal until the halving. But this is significant.
Adam, what do you think? Is this a Bitcoin only cycle for the first time?
I think you're finally seeing the decoupling of Bitcoin and risk assets. So I think for once, people are viewing Bitcoin as in time uncertainty. That's where you go. I don't think altcoins and other speculative things are at that point, because they're still viewed as inherently far more risky than Bitcoin or a lot of other assets out there, or securities, or whatever you want to call them. So I mean, do I think Bitcoin is going to benefit from this? Yes. Does that mean that the whole crypto space is now going to go to the moon? No, I don't think that's the case. And I think risk appetite has actually gone down considerably since this happened. So you're seeing Bitcoin rally, not because people want risk, and that's what it rallied for in the last 10 years. It's because people want safety, which is a fundamental shift that if you're bullish of Bitcoin, you should be pretty happy of that.
So you think that Bitcoin's now become the digital gold? It's the store of value. It's where you run to when you don't want risk. You go to the digital gold, and that's not going to filter into the altcoins, which it has in most other cycles.
Right. I think that's correct. But I don't think gold is gone either. I think traditional safe haven bets like bonds and gold and precious metals are doing just well. We'll probably see gold go above 2,000 an ounce in the coming week or so if this continues.
Yeah. Alex, would you be buying bonds? Would you be buying treasury yields?
No, it's a little bit too late.
Too late. You missed the boat.
I mean, for basically for getting a good entry, you're a week late.
Yeah. Grant, what do you?
If you think that the Fed's not going to raise rates, but the market's pricing in rate increases still, then we could be at the beginning of the run, right? If that's your thesis.
I mean, yeah, but let's say first and foremost, I'm a crypto investor. I'm a crypto speculator. I've been so exclusively since I migrated fully in 2020. So I think they offer very, very poor risk reward. I mean, long term, definitely. I mean, if I have to get into the shoes of a traditional finance investor, yeah, 100%. I think they offer great price points for someone who are not looking. They don't mind about the next few weeks, and they're not trying to fine tune their entries.
Grant, I'm not going to ask you a Bitcoin question. I want to ask you a real estate question. Right now, rates are up 7% mortgage. If you take out a mortgage today, is it almost buying time for real estate in the US? Is it maybe a time to start nibbling? After COVID, it was very hard to get into anything because prices went through the roof. Interest rates went to close to zero. Do you think it's time to maybe start nibbling or not? I think you're muted on your side.
Sorry about that. Goldman Sachs put something out yesterday. I think 97% of the loans that were done in the last 4 years are under 3%. We're not going to have a housing crisis or crash in this country. Single family homes are not going to be the problem. Commercial real estate, office, retail, strip centers, and apartments will be the problem. And it's going to be a massive problem. And I don't know why anybody's talking about it because it's all backed by commercial. It's all backed by treasuries and short and long-term mortgages. Okay. In the last 2 years, trillions of dollars have been booked at 3% rates. This is like the strippers of 2008 buying 5 houses. Well, Blackstone went and bought 50,000 not single family homes, but apartments. They have problems on their books. These big giants have massive problems. And if you keep the rates where they are, it all collapses. So that's why I'm trying to stock up on a bunch of those assets that they will have to let go to clean up their books.
What kind of assets are those? Commercial, residential? Which area?
All 300 unit apartment complexes in the Southeast.
Okay, amazing. All right, guys, listen, that's been great. Let's leave it at that for today. Much love to all of you. Thank you for your time. I know, Alex, you've got a hard stop 3 minutes ago. So thank you so much. I'm sending you much love from the fam. Grant, nice to have you on the channel. Adam, nice to have you on the channel. We'll see you guys again soon.
Thank you.
Thank you. For the Banter fam, let's quickly just go through our favorite alts and just make sure that nothing's happening on the market. So I'm quickly going to go to the bubbles. I see 𝗵𝗵𝗶𝗆𝗆𝗍 has been teasing its announcement. They got the announcement about the announcement trading at $1.37. You got Stacks, which is what Alex Kruger said, at almost all-time highs, 1.04. Phantom was running again today, but all these alts are starting to come down today because we've had a little bit of a pullback in Bitcoin. Nothing serious. We went from 26.7 or wherever we were back to 26.3. I think what we're looking at here is we've got to look at this 200-week moving average and make sure that on Sunday we close above the 200-week moving average. And if that happens, effectively all the bears will concede. Alex Becker, who has been hating on this pump since the beginning, even said, he said, congratulations, bulls, you've earned this one. I think all we need now is 𝗙𝗿 to come out and say, congratulations, I've pivoted, and then we're definitely in for a bull run. We do have some time for Q&A, but before we get there, just a reminder again that this amazing banter is brought to you by NordVPN. They are our partners. They do have 2 new products, which you can get. This one, as I said, I want to make sure that I give you guys all the facts and I give it to you guys correctly. It's called Threat Protection. It stops you from accidentally landing on malicious websites by blocking access, which is something that you really, really, really need in crypto. It scans files that you download from malware and deletes it immediately. It also blocks web traffic, web tracking, and intrusive ads, and it has an ad blocking for all browsers, Mac and Windows PC. So Go out and support them. Keep your crypto safe. It's $2.49 a month. It helps us. It helps them. Yeah, and I think that's a great one. Also, remember, I did say this to you yesterday, but let's quickly go through it again. Last call to get into Sniper School. We're there. We're there yesterday, but let's. I want to show you. I want to just quickly take you to where we need to go. There is a link over here. You click on this link. You sign up for Sniper School. When is the next Sniper School? Sniper School starts, I think, in a week. So you've got a week to get authorized and accredited and everything else. When you do that, you go through school. After school, you go through, if you pass school, which I think you all will because you're all very smart, you will get into Sniper School University, which is a 3-month intense trading course, every single day trading course. And then after that, there are a whole lot of jobs that we're doing and stuff like that. We're also turning it into a reality show. So it's going to be huge. But you got to sign up. You got to take the first step. Sign up. It's an absolutely free course and probably one of the best trading courses in the world today. Let's see if there's nothing else in the questions. Everyone says amazing, amazing, amazing. Bitcoin. I want to show you something because the guests were very macro guests, but I do want to take you somewhere. And I want to take you to, I want to show you 3 charts quickly. I'm going to go to total 2, which is, remember, total 2 is the crypto total market cap chart, excluding Bitcoin. Now, what I want to show you is I want to show you the following. So we're going to zoom out and we're going to go back to 2021 and we're going to look at the Bitcoin dominance chart. Also going to zoom out and go to 2021. So let's just quickly get that chart over here. This is the Bitcoin dominance chart, BTC.D. And I just want to show you how this pattern is playing out because it's not very different from any other pattern. So let's quickly go here and you can have a look at it. So you have Bitcoin dominance. I'm going to go back to the last huge spike in Bitcoin dominance, which you can see started off in between September and November 2020. You had the Bitcoin dominance go all the way up because the Bitcoin price went up. And somewhere around January 2021, the dominance started to drop. Let's now look at what happened to altcoins. So let's look at somewhere between October and November 2021. Let's look at the altcoins. So 2021, October, November, you can see that nothing really happened between October and November. And then when the dominance got to its resistance point, we had this huge pump in altcoins, massive, massive, massive pump in altcoins. And that took the Bitcoin dominance down. And I think that's exactly the same as what's going to happen now. Every time I think that altcoins aren't going to run, and in the past, I used to put my money back into Bitcoin, that is when the altcoins started running. So I think we are going to get a Bitcoin run. It's going to be hated by the altcoin people. And I think eventually it does turn. So let's see if I'm right on this one. I shall see you guys again on Monday, unless something happens on the weekend, in which case, of course, I'll be here streaming, bringing you crypto love and crypto wisdom. Remember, if you don't have an exchange account, open a Bybit account now as soon as you can, because there's up to $30,000 in referral revenues. Open a BitGet account. They also have it. And also we have OKX as our partner starting a new activation with us next week. And all those support the show. I'll see you guys again on Monday. Until then, trade well, my friends.